Hi everyone, welcome back to this week weekly market update. So, as usual, let's take a look at what's happening to the market for last week and things to watch out for the next week as well. As you can see that what is happening over the last 2 weeks, we know everyone is actually focusing on this SVB bank news. Mainly it's because of the issue, right? Causes the bank, to bank run shortage of money for withdrawals, and that is resulted how it links to First Republic Bank, right? Also another bank right now is facing the liquidity issues. All right, so therefore, what is happening on First Republic? The stocks like 33% went down close to 72%, and then, however, even though there is so-called a group of bank decided to pour in 30 billions in a deposit as a sign of confidence in the bank system, but it doesn't seem relief to the market or to the stock market itself, right? Because ultimately, right now the confidence in the banking system is weak as for now due to what is happening to the SVB previously. All right, so as next bank that actually facing the issue is actually a Credit Suisse as well. One of the bank is borrow up to 50 billion Swiss franc from Swiss National Bank. The stock lost 24% over the course of the week. Actually, Swiss National Bank, if you go and Google, right, it itself is also not earning any. I mean, their revenue, if I'm not wrong, last year they also reported a losses lah. So, they can borrow 54 billions. That is caught my surprise as well. But because of that, I think it gives some stability in Credit Suisse, but ultimately it's still not a good stock to pick the bottom knife at this point of time. All right, so this is what happening on last week, and not only on that, I guess it's due to this banking issue. The 50 basis point uh, interest rate hike, I think, is more likely to fall to the 25 basis point hike next week. So yes, next week, take note. A couple of news. Basically, one will be the FOMC rate decisions. Although the forecast is 5%, 50 basis point, but we are looking towards 25, and that's what causes the Nasdaq to spike up or shoot up over the last week itself, right? As you can see that Dow Jones actually dropped 1.19%, and then Nasdaq was down 0.74%. But if you look at the chart itself, right, let's go to the chart right now. If you go to the chart, you can see that this is Dow Jones and how it performed for the last 5 days, right? Even for Friday itself, the confidence check off, I think it's because of the rotations of the play style right now. Meaning to say that where we can see Dow Jones was going up, Nasdaq is the one that actually came down. So right now, vice versa, when Nasdaq actually spiked higher, as you can see for the last 4 days, right? For Tuesday, Wednesday, and Thursday, the market actually rallied even higher. So it's cool to the technology sector. I think people exit from the bank sector and then pour the money into the technology sector, and that's what the chart show differently between Dow Jones and Nasdaq itself. All right, so that is what happening, and with also 25 basis point, it does really help on the technology. I mean, ultimately the interest rate is still at a high side, which is not really good for the bank to borrow more money outside to help the bank, to help their own bank, because like for example, I think the loan rate to First Republic, or can't remember, to First Republic or to Credit Suisse, right? Even they give them or loan them extra money, all right, but it's all charged under with the current interest rate. So if let's say it go higher, it cause them to take even longer time or longer debt going forward, right? So for this, right, Fed may actually looking to approve a 1/4 percent point interest rate next week instead of the 0.5%, which is a 50 basis point. All right, so that is the difference between what is happening for next week that you have to watch out on next Tuesday, if I'm not wrong. Next Thursday, all right, next Thursday. Okay, so beside that, one things that actually spike up due to this, I mean, this bank run issue, this saga, right? I think Bitcoin is performing extremely well. If let's say you are in my Telegram group, you can see that this is what I returned. We may see Bitcoin going back to the resistance level at the 30,000 whole figure, and I returned it on the 14th March. Alright, it's during weekdays. This is what I said. Bitcoin jumped as much as 10%. But if let's say you wanted to long, please do not write. Right, you can do some support. Wait for some support. So what is happening? Let's go to the BTC directly. Okay, so for BTC wise, this is what I draw previously, right? So I said we may have chance on the 14th March, we have a chance to go to 30,000. So 14th March, where are we? 14th March, we are somewhere around here. Okay, you haven't break the 25,000. So after you broke the 25,000, which is the first minor resistance, broke above, we are looking for the next rally up to 30k. And right now we are halfway to there. All right, we are halfway to there. All right, do take note. This whole bank saga, right, as my own opinion, right, I feel that it's not going to last throughout. Meaning to say, right, recovery will definitely step into it. At this current age or this current technology or this current world, right, banking system is still a need and it's a must. All right. There's nothing wrong with the banking system at this point of time. It's just due to the people handling on the cash, on how they handle the liquidity. After solving this liquidity, definitely the chance of bouncing back will be there. And therefore, if let's say you believe in the system itself, you should take the opportunity in going into those kind of slightly longer ETF, bank ETFs such as like KRE, Spider S&P Regional Banking ETF, and that is what you can see on the monthly chart itself, because right now they are facing this pandemic. All right, it's COVID pandemic, right? Right now, this is a banking pandemic going through, saga going through. Definitely, there will be once again back to the system again. All right, so we can see it's a down spike fall. It will definitely come back again, down spike fall, and that is where, for chance for people who didn't enter previously, always market give you a second chance to ride on it. Okay, but where will you go lower? If you don't feel comfortable to enter now because the saga has not in, wait for a few more weeks first, or you can do your dollar cost averaging like how I did and how I shared when I was talking about this C3, the AI shares as well, right? So let's take a look since we are at the C3 topic. So for the C3, right, this is what we will be looking at previously. Let's look at the day chart and how does it perform. Okay, so we can see a very, very strong, not very, very strong, I mean a decent support area is actually at $20. Okay, around 20. Okay, as you can see, it's trying to reach that the third time. All right, the third time, gentlemen. See, I reached that the first 2, 3. All right, the third time. So it's really quite resilient. I can say that unless it break, then we may see a lower. Okay, so my level of support price, which I stated here, has not. I mean, it's still valid. All right, right now we are at a $20. It's a second price. Am I right to say? So, if that price drop, where are we looking at? We will be looking at $18, the next level. All right, just $2 below, and it's hopefully it's be supported by the 100 days moving average. All right, 100-day moving average with $18 around here. Okay, so this is what I'm looking at. If you For people who have entered previously, like at 22 or above 20, depend on your price level. If let's say it's too near to the 18 or to the $20, perhaps to the $20, don't do your DCA. All right, wait for it to go even lower or break through, then you slowly add in. Okay, if your price is fall between 22 to 28, this price range is very near to do DCA. Okay, so please remember your strategy when you want to build on it. Okay, next thing we'll be looking into IT Intel. Okay, why I take a look out of so many chips industry, like Nvidia is crazily high, AMD actually broke out. Let's take a look. AMD, all right, so can you see AMD actually brush up? Intel might be a tough one to call, but I'm not sure whether it's built over the milk. It has been running throughout for the past few days or 2 weeks itself. As you can see that the price actually went from the low to here, which is almost 20%. Okay, as you can see that, which is almost 20%. It's a decent run up. Right now we are actually at the minor resistance level. Okay, we are at a minor resistance level. But why I bring this up, because if let's say the chip sector is going to perform. Okay, I think Intel has a good triple bottom or double bottom, as you said. Okay, has a good triple bottom or double bottom. Okay, if you realize, right now it's being resisted by the 40 days moving average because it closed below, and it's also resisted by the price of 30, I think it's $30 round figure. Okay, $30 round figure. So I will suggest, I mean, this is up to individual, only after you break above, then we may see the next support at $34, which is the Fibonacci of 38.2%, which I dropped previously. Oops. Okay, which I dropped previously. So unless it break above, then we may actually chase. Alright. Or otherwise, for people who feel comfortable to enter here, looking good in the trade industry, there is your stop loss below. Okay, it's almost around 25 will be a good cutoff if let's say you hit, if let's say the market reverse and go down. Alright, if not, I will suggest that at current rate, is a good price to nimble in. Alright, nimble in. Nimble in. Okay, so this is what. So remember, if you want to change now, wait for breakout, otherwise wait for pullback, then we will go into it. Okay, so that is for Intel. Okay, so next thing we will be looking into is actually a BABA. Alright, I mean, I don't have any good news on it or any big news on it or any earnings report for it, but what I say that BABA has right very strongly previously since Jan 2023 to October. A good run up, a good pullback. Right now, after drawing the Fibo, we are actually reaching at a price around $80 or $81. Okay, so if let's say it hit that level, then it's actually a good ideal price for it to continue to ride upwards from here. Okay, so this is subjective to individual, is how you look at a chart. But if let's say you break below, then remember to do your cutting. For people who entered below like me at 70 plus, right, it might be a good chance for me to ride on it once a trend kickstart. So what do I mean? On this is a weekly chart. So on Monday itself, if let's say the price able to form a good green candlestick, break above confirmation, you can actually go in. Alright, but of course the risk is higher. If let's say you go in now, your risk is here will be lower. Okay, so it still depends on what is your risk appetite and how do you trust on BABA. Okay, so that's all for this week weekly market update. I'm not trying to update a lot of stuff because I know that last week it's tough for trading wise because a lot of volatility, one say good, one say no good. The market has been spiking up and down. Alright, but if let's say you hold on to the shares itself and you believe in it, you can actually accumulate where the price drop. Okay, so this is what happened. One day up, one day down. Alright, some people may not be able to take that volatility. So that's all for this week weekly market update. Hopefully you guys enjoy. See you guys next week again. Remember to share and like my video. Bye bye.